lesson 1-1, sorry, 11-1, hello to the new year. We have 3 learning objectives today, and I'm going to go over the highlights for you. So learning objective 1, explain the purpose of a general journal. Learning objective 2, account for purchases, returns, and allowances, and then we're going to post to a general journal to the accounts payable ledger and the general ledger. So little reminders. First of all, a general journal. It's a journal with 2 amount columns in which all kinds of entries can be recorded. Okay, so we've used a general journal. We're just reviewing a little bit. Not every transaction can be recorded in a special journal, so we have general ones. For example, we're talking about 3 Green Company, and they buy store supplies on account. The transaction results in a debit to supplies store and a credit to accounts payable. The transaction is not a cash payment, so it cannot be recorded in the cash payments journal. Nor is the transaction a purchase of merchandise on account, so it cannot be recorded in the purchases journal. The transactions that cannot be recorded in a special journal are recorded in a general journal. And here we have a memorandum. So when 3 Green receives an invoice from a vendor, when it buys store supplies on account, a pre-numbered memorandum is attached to the invoice noting that it is for store supplies and not for purchases. This is done to ensure that the invoice gets paid and recorded correctly. So we use memorandums for that. This is memorandum number 42, and it has the date. So let's look at our general journal and what we're going to do. So on December 2nd, we bought store supplies on account from Estes Supply for $165.25. It's memorandum number 42. So the supplies store increases, and the accounts payable increases. So when store supplies are bought on account, both the value of store supplies on hand and the amount owed to vendors increases. So the journal entry for this transaction is $165.25. It's a debit to supplies store and a credit to accounts payable, which we see right here, debit and credit. So we put in supplies-store and accounts payable Estes Supply. We have a memorandum and a diagonal mark right there. So our dates, account title, memorandum number, debit, account title, vendor name, don't forget the vendor name, a diagonal line, and the credit amount. Debit memorandum for purchases, returns, and allowances. Credit allowed for the purchase price of returned merchandise resulting in a decrease in the customer's account payable to the vendor is called a purchases return. Credit allowed for part of the purchase price of merchandise that is not returned, resulting in a decrease in the customer's account payable to the vendor is called purchases allowance. And then the form prepared by the customer showing the price deduction taken by the customer for a return or allowance is called a debit memorandum. So when people return something, they get the money back. So let's see. The form prepared, pause that, sorry. Customers generally do not want to keep merchandise that is inferior quality, different from what they ordered, or damaged when received. If that happens, the customer may be allowed to return part or all of the merchandise purchased. And that's where we get the purchases return. So when a customer needs to return something. Here we have another debit memorandum, and this is used for a purchases return and allowance. Now to journalize the purchases return and allowance, our accounts payable decreases and the purchases returns and allowance increases. So we have here the date, the account title and vendor name, and the debit memorandum number. We put a diagonal line there. Our debit amount and our account title, purchases, returns, and allowance, and the credit amount. So then we take a posting from a general journal to an accounts payable ledger. So this is where we split everything up. and it gets a little bit tedious, but not difficult. So we've already filled this out. This has not been there yet. That's where we take these numbers and put them up. Okay, right there, and it goes up. Okay, we put those lines in there in the last step, but now we add the vendor number. So we have the dates, journal page number, sorry I missed that, so it's general journal, so G12 goes right here. The debit, and then an account balance, so it's a credit, so our credit balance increases, add those together. Same thing down here, general journal, page 12, this is a debit, so you're going to subtract there. And then we put the vendor numbers back up high. And then posting from a general journal to a general ledger. So we have our general journal, and then we're bringing all the information down. And if you look here, we have account numbers, and our post reference for the supply stores, the account number goes here, and then the account number for accounts payable goes in part of that diagonal line. So our dates, journal page number, general journal page 12, debit or credit amounts, and then your new account balances. And then you bring your vendor number up and your account number up. Awesome. Audit your understanding. When is a transaction recorded in a general journal? When the transaction cannot be recorded in a special journal? When is the equality of debits and credits proved for a general journal? We didn't talk about that, so let's pay attention. After each general journal entry is recorded. What is a primary difference between a purchaser's return and a purchaser's allowance? A purchaser's return is credit allowed for the purchase price of the returned merchandise when a customer brings something back. A purchaser's allowance is credit allowed for part of the purchase price of merchandise that is not returned, such as for units that are damaged but still usable, or of a different quality that had been ordered. If purchases, returns, and allowances decrease the value of purchases, why are the returns and allowances credited to a separate account? Better information is provided if purchases, returns, and allowances are credited to a separate account, so you can track it. If you just wiped out or erased what you had done previously, you can't track it at all. So a business can then track the amount of purchases, returns, and allowances in a fiscal period to evaluate the efficiency of its purchasing activities. That's really important. Sorry, I had something here I wanted to read. Nope, I think that covered it all.